bridges, schools. They're often financed by municipal bonds, a popular conservative investment and a major closed-end fund category. Dave Lamb leads the closed-end fund team at Nuveen, a firm known for its long history with munis. Welcome, Dave. Thanks for helping out. Given the challenging virus-disrupted conditions, how have muni closed-end funds done so far this year?
Well, thanks, Chris, for having me. Municipal closed-end funds have certainly largely tracked the overall municipal market. At the beginning of the year, valuations were strong. Certainly when we entered into the dislocations around the pandemic in March, we saw closed-end funds react similar to the larger municipal market. In March, for example, the S&P Municipal Bond Index, I believe, had one of its largest drawdown months in history. Closed-end funds weren't immune from that. But what we have seen, Chris, is since March and early April, we have seen both NAVs, net asset values, and market prices rebound.
With the economy in recession, tax revenue supporting munis could decline sharply this year. In view of this possibility, what's your outlook for muniCEFs going forward?
Well, when we think about municipal closed-end funds, we still think about the products for long-term investors seeking attractive levels of income. And certainly municipal closed-end funds offer an attractive option for those shareholders. As we look forward, we continue to see the muni market recovering. We see the investment grade ahead of where high yield credit has been, but more recently we've seen high yield credit start to be more attractive. Again, we think this is a reflection of the low rate environment we've been in, over the last 5 years, but even more so now. So we're seeing investors attracted to higher levels of income. As we look forward and think about tax rates, we're more likely than not to see rates go up, both potentially at the federal and state level. States might be very specific to individual circumstances. For example, Illinois has a referendum on the ballot for November for an approval of a graduated income tax. So the expectation is that we may see higher taxes in the future, which tends to be supportive of the municipal market.
It's quite clear that not all municipal bonds are alike. Give us the lay of the land, if you don't mind. Tell us what you're looking at and maybe things that we should be thinking about.
Well, certainly, Chris, there are different varieties of bonds, revenue bonds versus geo bonds, also across the credit spectrum. Certainly, with revenue bonds that are tied to essential services, we think those are very stable credits and will remain as such. Along the credit spectrum, we've experienced really coming out of the downdraft in March that investment grade credits have performed very well and recovered nicely. Credit spreads, though, on high yield are still wide on a relative basis, but in the last several weeks, we've seen a narrowing of that spread. A lot of interest in credit. I would say that Nuveen, as a major investor in municipals, that's where we do our best work. Doing the ground up work as far as credit research on individual credits, individual names in the high yield space. We see a lot of value there today, and we think going forward.
Give us a sense of the scope of muni land.
Well, I don't have the exact number of individual muni bond securities out in the marketplace. It's substantial. What I do know is that as opposed to stocks where you have readily available quotes throughout the day, you can go online and type in a quote symbol and you can see where it is. The municipal market is more of a dealer market. So having the expertise of Nuveen and the connections throughout the industry to understand credits, understand valuations is important for investors to think about. And we do have a big platform and a big allocation across investment grade and high yield credit. over long periods of time, we've been able to deliver alpha relative to indices based on our active management, our active research in the space.
Before we go, in a few words, what's your view of the current investment opportunity with Muni closed-end funds?
Chris, I would say it is an opportune time to invest in closed-end funds in general. I mentioned earlier that through March we had discount widening, substantial discount widening, and the trend has been for narrowing of those discounts, but we are still a little wider than where we had been in 2019. So I think from a valuation perspective, I think there are some opportunities out there. I will also mention in the closed-end fund space, many funds utilize leverage, and right now our borrowing costs are at historically low levels. So the ability to leverage the yield curve or credit is very compelling right now. As a reflection of that, we have seen sponsors increase distributions more recently in the closed-end fund space. For example, roughly 10, I'm not sure exact count, but roughly 10 Nuveen levered closed-end funds raised their distribution in May. And if you look at their earnings relative to the current distribution levels, which we have on our website, you'll see that we are still in a very good position, and that many of our closed-end funds are out-earning, our municipal closed-end funds are out-earning their current distributions.
Well, that's certainly a positive sign. Sounds great. Thanks again. Dave Lamb with almost 30 years of Muni experience at Nuveen.